Greetings, members, one and all of the Salivation Nation. Here we go again. And as is the case many times, psychology rules the day in the markets as gold and silver rise, as trade deal doubts pressure equities. Let's explore. Yes, indeed, this is coming to us from CNBC, a source through Reuters. And gold has gained on Wednesday as U.S. President Donald Trump's speech on the trade ties with China diminished optimism for a deal and dented risk appetite. Spot gold rose 0.5% to $1,463.70 per ounce. U.S. gold futures rose $9.60 to settle at $1,463.30 an ounce. President Trump talked about raising tariffs eventually if there is no resolution or any deal on phase one, and that seems to be enticing buyers to gold, said Michael Matusek, head trader at U.S. Global Investors. Now, you think about it, so what's going on here? I believe that these moves in gold and silver, more so than ever, especially today's move, even though it's not incredibly really significant. In fact, let's take a look at the percentages here. You know, there's a movement up, just a half of a percentage point for gold to $7.30. Now, silver, as is the case whenever these moves has, silver has reacted more. It is now above that $17 level again. And I believe that $17 does provide a resistance point if this will hold for a few days. And we may have skirted, the below the $17 amount for silver. Platinum is up as well, $5, just over a half of a percentage point. And palladium is up $6, still short of its $1,800 high. Rhodium is up $50 at $5,550 there. Who knows why? It seems like the rhodium does kind of ride the coattails of the other precious metals, but does react kind of wildly here. Silver is the clear winner of the day, as is typically the case with moves like this. And when it goes in the other direction, silver is the loser of the day. So let's get back here and take a look here. Over the longer term, as an investment, gold is still the safe haven. Well, to me, those two terms are diametrically opposed because when you make investments, it incurs typically a risk. Safe havens are things to protect us from when investments turn sour. People still want to own it, and overall trend is up. Trump on Tuesday said that a trade deal was close, but gave no new details on when or where an agreement would be signed. Now, keep in mind, this is only for the first phase one trade deal, which I think have a great effect on farmers who are now getting the subsidies from the tariffs being collected. And that's important to note, and which is why I think we haven't really been hit quite as hard with our economy, because those tariffs essentially have been siphoned over to those farmers. It's disappointing investors in what was billed as a major speech on his administration's economic policies. He also rattled off some investors by threatening China with even more tariffs if the two countries do not reach a deal. The trade uncertainty weighed on U.S. equities, with further pressure coming from ongoing protests in Hong Kong. And going back to the trade thing, I really don't believe it until I see it. It's got to be signed on the dotted line. So the rest of it is saber rattling until it's actually signed. I'm not holding out any hopes. So we shall see. If it doesn't get signed, then I think we're going to see the precious metals make a move upward, and we may see some real pain in the economy at that point, where the unemployment numbers may go. And in fact, if no trade deal is signed, we could potentially see a recession coming next year. So we'll see where things play out there. The anti-government protesters in Hong Kong plan to paralyze parts of the Asian financial hub for a third day, with transport, schools, and many businesses closing after violence escalated across the city. Investors also took stock of latest comments from the U.S. Federal Reserve with Federal Chair Jerome Powell saying that the central bankers see a sustained expansion ahead for the U.S. economy, while the full impact of recent interest rate cuts has yet to be felt. Meanwhile, U.S. CPI data was better than expected as consumer prices for the month of October rose by 0.4%, exceeding expectations. So that's good news. So the economy really is doing well. And here's the other thing, too, we have to think about as what has been sitting on Nancy Pelosi's desk ever since the three nations signed the United States USMCA trade deal, which is United States, Mexico, and Canada. This is the new trade deal that will replace NAFTA. Critics have said there's really 90% of it is NAFTA, with the 10% being changed. I don't know what that 10% would be, but others are saying that it would provide quite a boost to the economy once it is signed. But it's obviously not being signed for political reasons, even though it's really pretty much a bipartisan agreement. And that is because the Democrats do not want to see this president succeed. It's quite obvious that they don't. Gold's reaction to Powell's comments, however, with regards to the CPI data, was relatively muted. The Fed is not going to make any kind of move on interest rates. So as a result of that, gold futures continue to remain firm, said Philip Streibel, senior commodity strategist at RJO Futures. Gold is highly sensitive to rising interest rates, which lift the opportunity cost of holding non-yielding bullion. Among other precious metals, palladium climbed 0.8% to $1,712 an ounce. The metal hit an all-time high of $1,824.50 on October the 30th as a result of a sustained supply crunch. The autocatalyst metal could, however, be headed for a pullback, RGO Futures Streibel said. He gave no reasoning why, and silver gained 0.7% to $16.89 per ounce. Of course, that was earlier in the day. Let's again take a look here at the market. The metals have made their moves here up, with silver over $17 an ounce for the ask price, which I think is good news. Hopefully we get that bid up above it as well too. And goes to show you these metals, that's what they're doing what they do in this particular case. They react to the markets. Now, I don't know the timing of this article from Newsmax. Not sure really what the date is. It says 12th of November, which was yesterday, really before we saw the big gains. But usually what happens is the prices start to go up. Well, what happens, people make bold predictions. This investment guru, Mark Mobius, predicts gold will double in price in the next decade. Yes, indeed, that is definitely a very bullish thing. Double in price. So you think about it, if it's, let's just say, $1,500, within 10 years it's going to go to $3,000. We shall see. A very bold prediction there. He says, people ask me, what is your target for 10 years? I would say it will double the price it is now. The emerging market fund manager and founder of Mobius Capital Partners, LLB, told India's CNBC TV 19. Spot gold slipped 0.1% to $14.53 per ounce as of late Tuesday. U.S. gold futures settled down 0.2% at $1,453.70 per ounce, according to Reuters. I am bullish on gold. No kidding, he sure is. I'm not saying that gold's not going to go down because it is going to fluctuate, but people should have at least 10% of their portfolio in physical gold. And that's just it. Most analysts, most honest and fair financial advisors will say it's good to have at least between somewhere, it ranges from 5 to 20% of your portfolio in safe haven assets or safe haven things like gold. In other words, safe haven could be like, money markets and the thing as well too, or diversity of those different things. So that's where he is at on that. As he has been saying that the rise of cryptocurrencies, no one really knows what the money supply is. You add that to the fact that the Europeans and the Americans and other countries have been printing like crazy, means that money supply has gone through the roof, and therefore the value of gold has to increase because it is kind of a currency with limited supply, which is kind of an obvious observation. However, timing what's going to happen to those currencies is a whole nother matter. In fact, timing of how long the dollar will last, people have been writing the epitaph for the dollar for quite some time now. I'm here to say that it could last quite a lot longer because it is the best of the worst that is out there. And people are still relying on it, people are still using it in other countries, and until they abandon it completely, and until we abandon it as the strongest economy in the world, it's going to continue to do what it does. And the dollar index is up now, and the economy is doing well. We're one of the very few economies in the world that is as successful as it is. And so we're not hurting right now. So that is the kind of where we stand with that. Gold, considered a safe haven of value during economic and political uncertainties, has risen about 13% so far this year on concerns regarding the U.S.-China trade resolution and monetary policy easing by global central banks. And yes, I think definitely, but I think it's more in relation to about the trade deal and Brexit, and also the upheaval in China. But you also have to think about Iran too. That is not settled. You don't hear much about Iran these days, but that is something else to keep in mind as well too. Uncertainty, just in general. But we get the trade thing settled, or the phase one portion of it signed. I think you're going to see gold and silver fall even more. But they've kind of gone up today. Agnico Eagle Mines Limited Chief Executive Officer Sean Boyd recently said he expects gold prices to continue to strengthen amid global economic uncertainty and deficit spending. And the metal may hit a record $2,000 an ounce in the next 2 to 3 years. And that's possible too. However, I will disagree with him there on the deficit spending. People just don't care about deficit spending and debts. That's a sad reality. All of us here in this community do. We understand that the debt and the deficit spending, especially, which adds to the debt, is a ticking time bomb. It's just that I think most people realize that ticking time bomb has a ways to go. They had something called the doomsday clock, which measured the level of threat, how long we had, essentially, based off this clock before there was a nuclear disaster. And people criticized Ronald Reagan's policies in the 80s, and so it moved to 3 minutes to midnight. And of course, Iron Maiden has a great song called 2 Minutes to Midnight. And, and that's kind of where it goes, this whole assessment threat. We need one of these doomsday clock, a debt doomsday clock. But the thing is it's going to be continuing to just ramp up closer to that 12 o'clock hour. But no one has really been able to predict, because in all reality, we should have seen something happen years ago. When we did the third round of quantitative easing, to me, that should have been it. It baffles the mind that we've continued where we have so far, considering what's going on. I will never be able to predict when there's going to be something happen, and my guess is probably the powers that be are trying to recoup new magic tricks or what have you to prop up that dollar to be able to continue what they're doing. Else, if something were drastic to happen, a reset of the dollar would have to bring into something that everybody, including around the world, could have faith in the dollar, and that would be backed by gold, at least to some point, as part of a rules-based monetary system that the Federal Reserve would have to adhere to. But nonetheless, that's above and beyond. And I think that if you're going to see the metal hit a record of $2,000 an ounce over the next 2 to 3 years, or double in the next 10 years, that is probably taking into account some sort of reset, is my guess. Government's focus on running a deficit budget and spending. That loose money approach is good for gold, Boyd said in a recent telephone interview with Bloomberg. You continue to get good buyer demand from China, India, and the biggest buying coming from the central banks since the early 1970s. The Toronto-based miner plans to increase dividends and strengthen its balance sheet with the extra cash flow generated from higher gold prices, which share buybacks aren't something the company has considered at the moment. Yeah, this whole thing about mining companies doing these share buybacks and dividends is something kind of new here, and we'll see how this thing all goes. But very interesting indeed. Obviously, this isn't a sort of an opinion piece from Newsmax here, but you know, it's an interesting take. There's not real, other than saying, you know, about the debts. You know, the cryptocurrencies is sort of a side issue. It's how that plays, because obviously it has a market share too. It's very tiny, very small. And really, if there's going to be some sort of a disaster, I don't know what would happen to the cryptocurrency markets either, which are essentially based off of energy consumption. That's what backs those, is the energy taken to produce the most popular one, Bitcoin, but also some of these other cryptos as well, like Ethereum, Ripple, and the like. There you have it. Again, these prices taking a move to the an uptick in movement of these prices off the news of the day. Post your thoughts below. What do you think? Where do you think gold will be in 10 years? Do you think it will double? Where do you think it'll be in several years? Do you think it'll get up to $2,000? Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching this video. Remember that I do post videos every day. If you don't see it show up as a notification or as an email notification or in your subscription feed, hop on over to this channel and you can see the latest videos posted. I would like to encourage you to please rate, share, comment, and subscribe.